Jim Romer with your full commodity report on the 30th of March through April 3rd. Don't mind the hat. I know if you have a hat like this, you get a free bowl of soup. I had a little bit of a fall out there jet skiing on the water this past weekend in Florida. Anyway, Climate Intelligence, one of our two newsletters, one of the most expensive newsletters on the planet. It also gives you amazing long-term trading strategies and commodities and how to use weather. We also have Weather Wealth as well. That's much more sophisticated, and it's also twice a week and gives a lot more trading recommendations. What is going on right now in commodities? Kind of a shoulder month in some of these markets in between the growing season and last winter's natural gas market and South American droughts. Of course, the Suez Canal, this ship that's been stranded there for the last few days, affecting billions of tons of products that are affecting some markets like cotton and also the crude oil market. But also the dollar has been very, very strong. And that's also affected gold prices here. As you see, the market has actually gone down quite a bit over the last month or so. It's right near support right now, though, of course, not weather related. I did warn some people that were asking me about gold more than a month or two ago. I thought rising interest rates and just a big long position could eventually pressure the market. We're at a point now that maybe we'll see some longer term buying opportunities, though of course that is not weather related. The dollar has been testing resistance because of concerns about rising interest rates. That's pressured some of the grain markets as well as wheat. Our number one trade, which traders went short a few weeks ago as the drought broke in the Plain States wheat growing areas. This is the way the drought looked. Look at that. All that red in Kansas and Oklahoma and Nebraska about 2 or 3 weeks ago. But since then, we began to get a little bit bearish a few weeks ago. Look how the situation has improved. Not as red in Kansas and Oklahoma near my shoulder. Much more improved, offsetting the frost damage from back in February. Look at the north, though, above my hat. It's a drought expanding. Will that continue? That could affect some of the grain markets if it lasts into the spring and summer. One of the key factors to predict summer weather and help you, if you're a novice trader, trade commodity grain ETFs, and experienced trader, trade options, is the PDO index. What is the PDO index? It has to do with the longer term cycles of ocean temperatures off the coast of California and into the Western Pacific. Now that map right above my head, notice that blue, the cooling, that's a negative PDO. That can sometimes bring droughts to much of the Corn Belt during the summer. Look at this. Back in 2011-12 there, right of your picture there in the bottom, there were droughts when we had a negative PDO. Back in the mid-70s, back in the mid-50s, where you see where it says hot, dry Midwest, that could actually happen this summer, though we've been somewhat in the bearish camp in new crop corn and beans over the last 2 weeks because of some improved short-term moisture. And also, we're having this important USDA planting intentions report this Wednesday that will affect the markets Wednesday and Thursday. Look how, because of the high corn and soybean prices, there's an expectation that sorghum, soybeans, corn will all actually see an increase in acres, and spring wheat can actually see a decrease in acres because the prices are not as attractive. Cotton is kind of a wild guess right now. But speaking of spring wheat, if we see this drought expand, as I mentioned before, into the northern plains spring wheat area, again, this is an area that plants wheat later in May and June, whereas in the southern plains where the drought broke, that's planted in October, November, and grows during the spring. If the northern plains drought expands, we'll have updates and long-range outlooks for you in our newsletters. That could be a really good trade with potential lower wheat acres and also the drought we're talking about up there. So anyway, one other thing we want to discuss real quickly. It's been really wet in Australia. Look at this. That could affect the cotton harvest. One of the reasons made cotton rally back last week. I do see some drier weather, though, for the month of April. If we begin to get really wet later in April and May in Australia, that could hurt the cotton harvest as well as the drought in Texas. So we're talking a lot about cotton this spring and summer as well. Coffee's is biding its time, poor demand, poor exports. Worries about the Brazilian real. There's one other area here I'm concerned about right now. This is Colombia coffee. think it's the third biggest producer of Arabica coffee in the world. Other than the drought in Brazil, in Minas Gerais, that people were all talking about, we spiked up briefly about a month ago to about $1.40 in coffee, then sold off in the weaker Brazilian real and lack of demand. Other than that, it's starting to get pretty wet in Colombia. Now, if this trend continues, if I see next month and into May and June, a continuation of very heavy rain where you see green, that could lower global Arabica coffee production even further. Stay tuned and subscribe because I have option strategies for all my clients. Again, though past performance is not indicative of future results, our spreadsheet, since the beginning of 2020, about 15, 16 months ago when I started this newsletter, is up about 60 to 70%. A lot of options, ETFs, and things like that. Anyway, have a great Easter weekend, and hope you join us. Thank you.